Welcome back, traders. US CPI figures kept the hope for a single rate cut in 2025 alive on Wednesday, creating some downward pressure on the US dollar, but helping other assets such as the euro, gold, and even Bitcoin to bounce back. But the burning question now is, will the recovery phase in these assets continue? Well, let's dive in and have a look at the charts. So looking first at euro dollar, well, we can see that euro dollar, the initial reaction was positive, but discouragingly, it couldn't run above the constraining 20-day moving average, and instead it closed back below the 1.03 level. So that sent some negative signals for the market and for the euro, which has recently hit a two-year low of 1.0176. So the question now is, will that downward pattern continue? Well, if we look at the technical signals, well, those haven't really improved. The RSI is still below 50, the MACD is still below its zero line and stable around its red signal line. So it seems that the downside risks are still intact, and that increases some questions about whether the price will manage to surpass the 20-day moving average, which is currently at 1.0338, and more importantly, break above this trend line over here, which is part of this bearish channel at 1.0355. Well, if we successfully move above this trend line, then the next resistance could come around the 1.04 number. This represents the 50% Fibonacci retracement of this uptrend from 2022 to 2023. So that could be a key level. If we surpass this as well, then the next barrier could emerge around the 1.0460 number, and then higher than that, I would like to see a close above the 1.0525 region, where this former constraining falling line is located. A successful break higher could drive us straight up to the 38.2% Fibonacci of 1.0611. Which we need to successfully overcome in order to call for a clear bullish trend reversal. And now, in the event this pullback persists, and if the price closes below 1.03 for the second day, then we could see an extension back to the 1.02 critical support region, which coincides with the 61.8% Fibonacci mark. Slightly lower than that, the lower boundary of this bearish channel is located at 1.0168. So a break below this territory, which includes a couple of support lines, could cause a stronger selling, probably towards the 1.0092 level, and then below that the case of parity could materialize, and if we have sharper decreases, then the price could extend towards the 0.99 former barrier. Now looking at gold, well, unlike euro dollar, gold has managed to sustain its gains, and it's currently trying to surpass the 2700 level. The problem here is that the price is within this, is very close to the upper boundary of this bullish channel located at 2720. This coincides with the previous highs from November and December. So a test near 2720 level could be important. A break above that could take us up to the 2750 and 2770 constraining zone, and if we manage to surpass the previous all-time high of 2789, then the rally could next stall around the 2815 level. Well, if we look at the technical indicators, well, we can see signs of improvement. The RSI is still rising above its 50 neutral mark. The MACD is within positive territory and above its red signal line, and the stochastics, although near their 80 overbought level, they're still holding a positive slope. So there is room for extra improvement, especially after the break above this resistance trend line over here. Nevertheless, if upside momentum fades immediately, then the 2665 and 2677 territory could provide support. A break below this region and beneath this short-term bullish channel could take us down to the 20 and 50-day moving averages currently located within the 2635 and 2645 region, and then lower than that I expect some consolidation somewhere between the 2600 psychological mark and the 2618 level, where this support trend line is located. Failure to hold here could confirm additional losses, probably towards the 2570 and 2580 level. Another question here is whether the previous Elliott pattern continues. It seems that we have that the ABC correction has already been completed. That remains to be seen. But if we indeed have completed this short-term bearish correction or consolidation, then it's possible that the price has started a new 5-wave bullish pattern, and it's currently trying to complete the first wave as it did back in June in 2024. And finally, having a look at Bitcoin, this is quite interesting as well. It's currently facing resistance around this tentative resistance trend line at 97,400. We're expecting to see whether the price will manage to close above it, above this trend line. If it does, then the price could pick up steam towards the 106,000 level, where this former support turned resistance trend line is located, and then beyond that we could see new higher highs, a new record high probably near the 112,600 level, where a longer term resistance trend line from 2024 is placed. And if there are more increases from there, then I expect the next barrier to come around this steeper upward moving line at currently seen at 170,370. Well, if you look at the technical indicators, there's signs, there's some bullish signs. The MACD is trying to strengthen above its yellow signal line. The RSI is also above its 50 neutral mark, but caution remains since the RSI has yet to breach its downward trajectory. So we need more evidence, we need more candlesticks to confirm whether this upward move could continue in the coming sessions. Well, if selling pressures resurface, then probably the price may again test the critical 91,700 support territory, which has been holding the price in a sideways move since the end of November. If we cross below that floor, then the next support could come around this support line over here at 84,500 and 85,000, and the 85,000 psychological mark could be also in sight in this case. Additional losses from here could then probably drive the price towards the 200-day moving average and this constraining line at 74,250. So that's all about Bitcoin, Eurodollar, and gold. Thank you for watching, and see you next time. Bye bye for now.